60% of the EVs purchased in Q1 were leased, and EVs have hit 23% of leasing. So again, as a dealer, just somebody in the industry, think about the vehicles that are coming off lease. This year, we've got about 1.2 million fewer vehicles coming off lease, but more of them are going to be EVs. And next year, we pick up a bit more volume, and more of those are going to be EVs. So get ready for used EVs coming onto your lot.
Welcome to the Experian Auto Insights podcast, where we explore the data driving today's automotive industry. Join us as we unpack key insights from Experian's quarterly automotive trends reports to help you stay ahead in a fast-moving market. Here's your host, Jason Harris.
Hey, what's going on, Podcast Nation? Is Jason Harris here, and thank you for joining me on another episode of the Experian Auto Insights podcast, where I get to talk to, well, anybody and everybody I want to talk to when it comes to the cool insights, market trends, and finance market analytics that Experian is putting out there. And if you guys don't know, you need to know. And throughout the show, you're going to see a QR code pop up. Probably going to pop up right about now. You guys need to make sure you get a copy of this report. If you're not already getting it, there is a substantial amount of information and insights that will fundamentally give you better ideas and strategies to your marketing, to your sales and operations, to your fixed ops operations. If you're not getting this report, you need to get it. And the coolest part, it's free. Guys, today I have a very special guest with me. In fact, I've been looking forward to this because I don't get to talk about finance that often, and who better than to talk to it about probably one of the most intellectual people, I think, in our industry. Hey, Melinda, how are you? I'm so excited that you had the time to come jam with me today.
Yeah, absolutely. I'm happy to be here.
Now, I love your title, by the way, Head of Automotive Financial Insights. Do they fit that on a card, or do they give you like an acronym for that?
It does fit on a card.
Okay, cool. I just figured, in our industry, we love our acronyms, so I was going to ask. Well, hey, Melinda, I love kicking off these podcasts with a little origin story, because I'm just fundamentally fascinated how people make their way into this industry. So let's start there, Melinda, before we get into the cool insights. How in the world did you get started in this crazy little world that we call the automotive industry?
So I've been in the credit industry for, about 27, 28 years, working with credit data, risk modeling, model development, industry trends kind of products and services. And I came over to Experian about almost 22 years ago, actually about 22 years ago, and started managing a product that gave market insights for lenders of, hey, what's going on in your market? What's your share of a dealer? What's going on with scores, rates, terms? What are consumers buying and how are they paying for it? And I started putting together these little presentations that basically said, hey, this is the kind of insight you could get if you also subscribe to this data set. And it just took on a life of its own. And I've been putting on a quarterly webinar, quarterly industry presentation every quarter since 2007. So this first quarter just finishes quarter number 73.
That's impressive. I think I started my podcast in 2016, and I tell people that I've done almost 2,000 episodes, but to do something consistently over 73 quarters, and then also talk about a really fun and financially interesting time in our industry to get involved. Boy, was there some crazy stuff going on in 07 and 08.
There certainly was. You go back to 2007, pre-recession, and a 60-month term was the most common. 72 was way out there, and now that's the most common loan term.
Isn't that funny? It's like I tell people, they're like, "How long have you been in the business?" And I tell them, well, you know what? Long enough to remember a single-digit interest rate.
Yes.
All right. When that got introduced, I think it was Ford. I think it was Ford that introduced the first 9.99% new car interest rate and everything. But it's funny. You look at new salespeople today and they're like, what? I'm like, yes, guys, there was a time that this was the norm for interest rates in our industry. Anyways, I digress.
Yeah, absolutely.
All right, Melinda, we got some cool insights that we're going to go through, and I am excited to get into this. It's an interesting time in the industry. It's funny, people say that. It's probably always an interesting time in the industry, but there were a few things that I found in your Q1 report that was like, we really need to have a conversation about this so that we can be better prepared kind of throughout what's going to happen for the rest of the year. So if you want to get us kicked off, let's get into some insights.
Absolutely. So, like I said, this is a little bit of a shorter version of the full presentation. It's there's a recorded podcast or recorded webinar. It goes about 50 minutes, so we're certainly not going to cover everything. But yeah, so the presentation covers a lot. There's primarily 4 sections. I look at some of the overall origination trends, just the total market. Then we have a section on new vehicles that also includes, a subset on what's going on with leasing. It also focuses on the EV space. Then we look at used financing, and then, balances and delinquency. And like I said, it's a pretty robust presentation. Some of the things and just, data, it's all Experian data. We look at the entire industry, focusing on registration, title data, and then of course, our consumer credit database. So if we want to focus on some of the items going on with originations, this has been one of the interesting trends that we've been tracking. And I know I tend to put a lot of information on each slide, but 2 key things to focus on here really is the 2 charts on the top. So the left-hand side, one of the things I look at is the percentage of vehicles with financing, or kind of the subtraction of that. How much cash are we seeing in the market?
Sure.
And for new vehicles, it's been really interesting because as soon as the rates went up, it kind of became counterintuitive because the rates were going up at the same time that, inventory shortages and new vehicle pricing jumped up with, markups, and, our loan amounts grew for both new and used, 30%, year over year. But at the same time, we started to see more cash, especially on new. Historically, you'd only see around 15% cash. And for the past couple of years, it's been 20% cash. So, 80% of new cars with financing, loan or lease, 20% cash. And we're kind of at a record high of cash for used vehicles. And part of that is because we are shifting into older used, from an affordability standpoint. And then leasing, we're starting to, hit leasing again, right around 25%. So leasing starting to grow. But then again, low levels of leasing from a couple of years ago, reduced off lease volumes, market getting a little tighter from some of those regards.
And real quick, if you could just go back to that slide.
Yep.
I think for the dealers out there watching and listening, and guys, by the way, the QR code is going to pop up occasionally. You need to make sure you get a copy of this, right? But from an operations perspective, there's a strategy that has to kind of go in place here. And when I really kind of think about the marketing, it's not enough that we just are marketing the vehicle, but we actually do need to be marketing the financing.
Yes.
And the leasing. I'm glad to see leasing coming back, but that's still relatively low numbers. So it doesn't surprise me to see more cash out there being used, but that changes the way that we should be marketing, so you're going to find a balance out there, but it's a great thing to take to your marketing team and saying, just look how many people out there are cash buyers. Yet the only thing we're putting in our marketing right now is a $255 biweekly payment. Maybe we need to shift it up, or at least try a few different options, right? Please continue, Melinda.
Yeah, and along that same line, a couple things to consider. Again, record highs for cash for used.
Yeah.
Consumers. One thing I don't really cover in the deck, but I do it when I speak at a lot of conferences, is consumers are shifting more and more into older vehicles, and that's part of the reason why we see more cash. So, as a dealer, are you working with lenders who will finance a 9 or 10 model year vehicle? Not all of them will. And it's not just subprime consumers buying older vehicles. Half of the consumers who purchased a 9+ model year vehicle so far this year were prime consumers. And so, again, are they also, low mileage, older vehicles, easier to finance, but do you have the right set of lenders who will go older?
Well, and I think there's a great opportunity there because look, we've seen this happen before. We've seen when interest rates go up, people are typically buying older vehicles, but that creates a great opportunity for us as a dealership because we know they're going to come out of that vehicle faster than if they would have bought a newer vehicle. So again, just something to kind of think in mind, guys, when you're thinking about not just your marketing before the purchase, but your marketing after the purchase too, because I know, and we're going to see it, these vehicles are going to come back quicker. They're just older vehicles, therefore they will, right?
Absolutely. Yep. Get that loyalty in. Other things we look at in the presentation, market share. who are the lenders, out there with the market share for the total market. We saw banks pick up some additional market share. Credit unions picked up a little bit. It's not the same market that dealers had in 23 when credit unions just really skyrocketed share.
Yeah, they dominated. It's funny, like, when I was a dealer, I was thinking about, like, and in fact, when I saw this, I actually had to look at it twice because I had to scratch my head. I'm like, is that real? That's because before, you're 100% right. I mean, that's most of my relationships, most of my conversations were going to be with my credit unions. And I think for anybody out there watching and listening right now, you may need to start shopping, for some additional lending opportunities out there. I think too often we just kind of we get into kind of the motion of just things kind of happening, and we forget that, no, guys, as dealers, we can choose who we're doing business with, and you may want to go shopping a little bit. There's some opportunity out there. Sorry, go ahead, continue.
Yeah, no, absolutely. We had, moving into 23, a few banks left indirect lending completely. Some credit unions filled the gap. They were also slower to raise their rates. So it was really difficult to compete. If you were a bank with a, 8% prime rate, the credit unions were out there with 6. So really hard to compete with that. But yeah, so we monitor what's happening from a share standpoint. It's really interesting what's happening these days. Other things, of course, being Experian, we look at the credit. Average credit scores for car buyers. And we can split this, between franchise used, franchise new, independent used, there's no really independent new. And also, fuel type, what's the average credit score of a EV buyer, things like that. So lots of things that we can do and how it tracks and trends. It's been relatively flat, especially for used, not a huge amount of change. But, if you look at that trend line on used, 645 back in 2015, that was more of a near prime credit score, and 684, a lot of lenders consider that prime. So yeah, market shifting quite a bit.
It's funny because I didn't think it would shift that way. Normally I would, it kind of shifts the other direction, but it does, right? So it's just something to think about, as, I'm calling them super prime buyers, are on the rise while subprime is shrinking. Again, is our marketing in place for that? Is our F&I teams, are they coached? And do they have a strategy for this? Because to your point, I mean, we see the conversation is going to change, right?
Mm-hmm. Yeah, and we see this in the entire credit population. Just more and more consumers are moving into, those that were maybe deep subprime have moved in, the upper end have moved into subprime. So there's definitely been a shift. Absolutely been a shift. We also split out by the various risk tiers. Most of the market very prime. It's subprime really kind of shrinking. Just the volume of the deep subprime consumer just hasn't really come back since COVID. So that's been a little bit of a challenge for some of the subprime consumers looking to get financing. Is again, are they out there able to obtain the funding? Do you have enough subprime lenders in your portfolio? Who will fund the 550 credit scores?
Well, and the funny thing is you're just not seeing as many of them anymore, right? So just like,
Mhm.
again, as a dealership, it's like you guys just have to get ready for, honestly, just higher credit score customers, where, I mean, I'm not going to say there's a simplicity, but there is definitely a more straightforward strategy. All right. When you're dealing with a subprime, customer, but when you're dealing with prime and customers that are again, it's just another breed, both on the pre-owned side and on the new side. It's just something that, you dealership, you just need to have a good, solid conversation about.
Absolutely. Then again, we've got a pretty robust new vehicle section. Of course, this is really going to hone in on the franchise dealer side, whereas my used space is both franchise and independent. But lots going on in new. Again, we look at market share for new. Again, credit unions picked up a little bit more share, but captives really dominating. So far this year, if the captives weren't out there doing incentives, a lot of that business did flow into the banks. Of course, some of that bank share increase has been a little bit of a shift in some of the relationships on the EV side. So that accounts for some of that growth. And then, captives really just dominated last year. I mean, that was one of the record peaks. I think the last time I saw a captive share in the 60% range was, back in 2009, 2010. So a lot of changes there. Other things, we continue to focus on, again, EVs. This is a small section that I include of, what share does EV have of new vehicle financing? And then the really dramatic part on this slide is the far right-hand side. Nearly
That's big.
60% of the EVs purchased in Q1 were leased. And EVs have hit 23% of leasing. So again, as a dealer, just somebody in the industry, think about the vehicles that are coming off lease. This year, we've got about 1.2 million fewer vehicles coming off lease, but more of them are going to be EVs. And next year, we pick up a bit more volume, and more of those are going to be EVs. So get ready for used EVs coming onto your lots.
We got a flood going out. We're going to have a flood coming in. I got to be honest with you, Melinda. I kind of actually dig this. Like, this actually makes me happy. I mean, I know, look, if you're out there watching and listening to this, you're watching to this because I know that you're a proactive operator, hence the reason why you've downloaded your report and you're watching this episode. But I've been in a lot of dealerships recently, and I'm just surprised how they just want to stay away from these things like the plague or something like that. And it's just the consumers there. I mean, look, I would love to run every dealership at 60% leasing penetration. Just how much does it just make my life that much easier from a marketing acquisition cost, knowing that these vehicles are coming back? And I've seen the stats on people that continue to buy electric vehicles. It's just astronomical. It's just, you don't find that unless you're a Subaru dealership out there, by the way. If you're a Subaru dealership, just forget everything we're saying here, because no matter what you do, you're always going to sell back into your customers. But it's very, very impressive. I mean, you see the numbers that Tesla has, and now I think dealerships are sitting out there, and there is opportunity there to gain major loyalty with a product. But you got to be paired from the financing perspective of it. Just there are a lot of dealerships that I can't tell you how many F&I managers I've sat down with that just hadn't done a lease in 6 months or 9 months or something like that. It's like, you almost kind of need to dust that book off. And it's like, are you guys ready for this? Because that's how the consumer wants to own it, right? The incentives are there right now, and the loyalty opportunity is huge. I dig this. I love this. This was my favorite stats right here.
Yeah, it's going to be interesting, later this year, with the tax credit, because right now the 60% leasing is because the lessor is able to apply that credit, and it produces significantly lower monthly payments on the leased EV side than it does the rest of the market. So this will be an interesting figure to watch for the rest of this year. But regardless, leasing will always drive a lower payment. So that's definitely something. I think we'll continue to see higher levels of leasing. Whether we continue at 60% throughout the year, we'll soon see.
Seems like the inventory is there, so it'll be interesting, right?
Yeah, and other things that we look at, again, what are the top EV models, and then how are consumers purchasing those vehicles? So just in this example, one to point out, Prologue picked up a lot of market share recently. They've moved to the number 3 EV, and they're leased at almost 90% of the time.
Yes.
The ID4 also leased at 88% of the time. So purchase patterns vary quite a bit across the various models. And even the leasing on the two, the Model Y and the Model 3 has doubled year over year. They didn't have nearly as much leasing on them last year as they have so far, ramping up this year.
Well, it's funny when I kind of look at this and I saw Honda and I saw the explosion in that, right? But then I kind of thought to myself, I'm like, look, that's a brand that historically does a great with leasing. And in fact, actually, just from a dealership operations perspective, they're used to it. They talk about it. The salespeople talk about it. They market to it all the time. So now all of a sudden they get a vehicle that's got great credits and incentives that go along with it. It didn't surprise me to see just this. It's like they were ready for it. But I think for dealers out there watching, listening right now, knowing, and you all know that Honda dealerships are usually really good with leasing. They're always at the top 3, typically top 5, right? That's something that you can achieve as well if you kind of embrace that same strategy. The conversations have to happen earlier on. They're great vehicles to lease. They're going to come back. Anyways, I liked seeing this because it just proves the point that, it doesn't just have to be a Tesla thing. You know what I mean?
Yeah, and Honda is the number 1 leased make for Q1. And they typically have been. That's one of the slides I include in the main deck is, who are the top leased makes and how has that changed year over year. Tesla, I think, moved up to number 3 with huge growth because of some of these figures you see here. So yeah, so like I said, this is a little abridged version of the presentation just for time, but there's so much more in that deck. Like one of the things I include is this slide here, which is why you see leasing where it is across these models. So just look at the monthly payment difference. So
it's huge.
Yeah, these are the top 10 lease models. Right now in the entire EV space, the payment difference between a loan and a lease is around $175. It varies if you're looking at luxury versus non-luxury. The non-luxury space, it's even a bigger gap. But the entire market's closer to around 150. So there's again that tax credit being applied. I mean, look at the ID4, $318 a month. So again, a lot of opportunity to meet that PTI requirement by moving somebody into a lease if they're able to meet the leasing credit tiers. Most leasing is going to be prime, but you do see some in near prime, not a whole lot in subprime, but it is out there.
And with the changes that are coming, I don't know if it's just me, but man, I'd be putting every EV I have on my front line. Because you just don't necessarily know from a political landscape what's going to happen next. But I mean, I love these numbers right here. But then when you cross these numbers to the gas loan and lease pricing, whoa, talk about another big gap and huge opportunity. And so it doesn't surprise me that consumers that, nearly 10% of the new purchases, are EVs right now.
Yeah, absolutely. And especially those lease payments, pretty impressive. And this is one of the slides I mentioned earlier, looking at who are the top lease makes, what's the growth. And right now, a lot of that really big growth you see, with, of course, Tesla, all EV, but some of that big growth you see with Hyundai and some of these other makes, it's driven by the EV space, very much so. Then of course,
you look at the loyalty on the Tesla side, right?
I mean, very high.
And I can understand why this happened also in Q1. This is when the Model 3 refresh came in, which by the way, I think actually looks considerably better. All right, than the previous one. And it makes it a very competitive. And when you look at the lease rates, it makes it very competitive. And look, I don't know how. I understand a lot of dealers out there. You don't like the word Tesla. You don't like using it. All right, but you have to admire the loyalty factor that is built into that. And guess what? It's not just Tesla, because you see it in Honda as well. Like it can be there if you're intentional about it. I think that's the key. Anyways.
Yeah, absolutely. Also look at just the rest of the lease space, again, why leasing is so popular, monthly payments, quite a bit lower. And again, from a lender standpoint, most of the leasing does of course go to the captive, but regardless of, whatever, whether it's a lease or a loan, regardless of that, the lower the payment is, the less likely it is to go delinquent. So from, a lesser standpoint, from a lender standpoint, trying to keep those payments low is, absolutely essential. And of course, it's very challenging when you look at the average price of a vehicle. And that really speaks to this. So this is just the last 3 years, but if I like I said, I've been doing this for a long time. And, you go back 10 years ago and the average new loan amount was like maybe 28, 29,000, pre-COVID, pre-shortages, it was in the low 30,000. Then we jump up to 40,000 pretty much overnight. And now 41,000. Of course, this is Q1. So of course we know what's coming. Potential price increases, however much that's going to impact, who's going to carry that burden. But it'll very likely spill over into higher loan amounts and higher payments. We're now at 745. I'm sure so many of the F&I folks have people coming in looking for a $400 payment because that's what the consumer got 5-6 years ago. And that's not the case anymore. So it's a pretty big sticker shock for a consumer who might not have been doing their research.
Well, and then what typically happens when that goes is that we start seeing the term of the financing go up. I mean, like I remember the same time that you were talking about, back when it was, $28,000, $30,000, but also the longest term at that time was around 60 months, maybe a dash of 72 in there, but man,
Yeah.
that was it, right? So not only are the interest rates higher, the dollar amount's higher, but now the term is longer.
Mhm. And we're starting to see the term grow a little bit again.
Are we?
Year or two ago, about 2 years ago, when the captives started running incentives again, when they started getting more inventory, most of those were at 36 and 48 months. It's really only been the last year or so where the 72s and 84s from the captives are coming back. But 72 still remains the most common term, still out there. So it's still predominant, but they're continuing to grow a little bit. And that, of course, out of the four things you can manipulate, can't really manipulate rate too much when you've got a fixed rate, but term is something that you can extend. And we're increasingly seeing lenders come into the market who are specializing in long term. We're talking like 100-month.
God, man, they just always seem to be reserved for like wildly specific exotic vehicles and RVs and
Not
like boats and stuff. But like now you're right. You're seeing it expand outwards. And maybe it's because the price of the vehicles are going up. But this is just me putting my dealer hat on. Like, I don't know. That doesn't necessarily make me feel really great. I like the previous slide. We'll go back to leasing.
Well, one of the things that I do look at in some of the data is attrition rates by term. So, for those that close, average months on book, and term really doesn't play that big of a role.
Really?
I tend to notice that 84-month loans actually tend to close at a little bit of a faster rate than 72s and 75s. You got that 72 spillover, the credit union special of 72 plus 3. But the close rates are pretty consistent. There's not that big of a difference across them.
Wow.
Yeah.
It's interesting, especially when we start seeing, nearly 14.5% of new car payments, are over $1,000 now.
There you go. 17 on the loan side.
Jeez.
Yeah. So, consumers can still get the under 400, but that's really where you're moving into leasing. On the loan side, the most common is between, the 500 and, 700, and then 17% over 1,000. And it was really, when we moved into 21 and 22 with that huge jump in loan amounts, it pushed a lot more consumers into that $1,000 payment. This is not a Highline. This is a RAV4 or a Mazda 3 at 9 to 11% interest for a 72-month loan.
Yeah, we're not talking about a Tahoe or something like that. That's at like a $1,500. But yeah, you're right. It's not what it was. The vehicles have fundamentally changed, right?
Mm-hmm. Absolutely. But yeah, more and the trend line on the $1,000 payments has just been remarkable. 5-6 years ago, it was just, single digits and low single digits. And now, we're going to hit 20% before the end of the year.
Well, and I think for any dealer out there watching, listening right now, you got to make sure you grab a report of this. So the QR code's going to be popping up. You guys better scan it, get a copy of your report. But I would take this slide and just sit down and just talk with your F&I team. And, just kind of see what they're seeing, have kind of a strategy, a communication strategy, before someone even gets into the F&I office, knowing that this is going to be a conversation. The worst thing you can do is just someone get blindsided and just come in thinking that they're going to get something. So I think that the financing conversation has to happen much, much, much earlier in the transaction than it ever has in the past. Would you agree, Melinda?
Absolutely. You're not, it's especially on the new vehicle side and late model used. Yes. If there's no financing, you're not getting that consumer in that car.
That's a good point. Very good point.
Yeah. We always say it takes, 3 things. It takes a car, it takes credit, and it takes a consumer. I also split up, I'm not going to spend much time on this, but, for every attribute I look at, we also look at it across the credit tiers. So again, if you're looking at, bringing in, if you've got, more subprime consumers coming in, we look at what the loan amounts look like. Really over here, what's the rate? What's a consumer with a 600 credit score? What kind of rate are they going to be getting? What's that going to result in for a monthly payment? Terms. So this certainly, again, kind of looking at the averages across the different risk tiers. So, consumer walks up and you're like, hey, how do you think your credit is? Middle of the road. Well, you're going to be looking at, 10 to 14% rates and, monthly payments of, upper 700s. So again, kind of knowing what's out there, what are your lenders offering across that full spectrum? Are
Well,
things
and
you
I
can
know
look
for
at.
a lot of dealers out there, it's been a bit of a headache, right? Because necessarily what your manufacturer is marketing and what you're actually able to get for the consumer, in some cases can be wildly different. And I understand that. I feel your guys' pain, but regardless, it is what it is. You got to have a conversation, right? I mean, the F&I process needs to be now tailored, for this group that's going to have some approval challenges. This is the one thing I love about this side of our industry, that there's an element of experience that I think goes into crafting out a solid, credit presentation, back to the banks before it comes back. And so, I think data like this, I know as when I was an F&I manager, I would love to see this because it shines some insights of like, oh gosh, okay, that's gonna help me change that conversation, or sometimes might have to change the vehicle,
Yeah.
match the needs. But yeah, it doesn't surprise me.
Yep, absolutely. And then lastly, on the new car slide, we look at, again, the term distributions. The 85-month term continues to grow. Almost 3% of all new loans are 85 plus. Again, most common is 72. We did start seeing, like I said, over the last 2 years, some growth in the shorter term loans, the 36s and such, but we're increasingly now moving into some of those longer. And again, it's what's the average credit to get into those longer term loans? We've got we can dig into so much data with what we have. How do rates change as you move up into the different terms? Because of course they do. I tend to not cover that in the presentation because got to have something left for people to buy. But there's so much data that you can really get insights on what's happening out there.
Well, and I think for everybody out there watching and listening to this, like I said, again, you need to make sure you get your copy of this. The QR codes pop up a few times. Make sure before the end of this that you guys are registering and getting a copy of this. But man, you got to go back to leasing. Like you just really got to embrace that. I think if you're a dealer out there and this too, like if you're in this business for the long run, all right, that you need to have your entire sales team trained, all right, to be able to have a leasing conversation. The cool thing is that when you kind of look at the data, you all have a vehicle that does lease well right now. That's what I'm saying. Sometimes I think we saw in the past where it's like there'd be a couple manufacturers that are truly dominating it. But when you go back to kind of that payment slide, like every every manufacturer's got something that is actually leasing at a very, very reasonable rate right now. And consumers are, I think, I'm not saying that they're not past, EV, anxiety and distance anxiety, range anxiety. That's what I'm saying. But we're seeing the numbers are there. I mean, we're like over 10% of new car registrations are EVs, and I think that's only going to continue to grow as other manufacturers are growing out their technologies. You're seeing more hybrids being introduced into the space right now. 2025 is going to be a super interesting year because for a lot of us, there's a lot of new product that are coming down. Incentives are not as consistent as they maybe used to be, in previous years. So like I think it's, as dealers, it's really on us to take in our inner Boy Scouts or Girl Scout and just be ready for what is to come, and at least just have a conversation. And I think there's the slides, Melinda, that you brought up today is something that I would love to sit down with my management team, with my F&I team, and just say, hey guys, look, maybe from a marketing perspective, from a process perspective, the data is there. What's it telling us? And what are you guys seeing on the floor? What needs to change? Because I think that's what it is. I don't think it's necessarily major changes in our operations that have to happen, but I do think there's going to need to be some small tweaks made to
Mhm.
both our processes and our marketing, to really meet the customer where they're at right now.
Yeah, and these are really data intensive presentations. I will tell you, mine does have a talk track where I talk through and walk through all the slides. So if it's something that you just don't want to look at numbers, you can listen to the audio, goes along with it. It might help kind of comprehend and understand kind of what you're looking at if you're not just wanting to sit there and stare at numbers on a screen.
And I think anybody out there watching, listening, you definitely need to check that out. Melinda, I know we're towards the end of our time today,
Mhm.
and I feel like I could talk finance
Yeah.
stats with you like all day long. I love this stuff. This stuff is great.
Mhm.
Again, this is just something as a dealer I wish I had more of. And the cool thing
Mhm.
is for everybody out there watching, listening, you can have more, and it's free.
Yep,
All you have to
absolutely.
is scan the QR code, go to the website, get it. But Linda, I still think there's still things that we haven't necessarily covered or bits of the conversation that needs to continue. What's the best way for the dealers to dive deeper into this or maybe connect with you as well?
Yeah, absolutely. Like I said, we've got the presentations available on our website. There is, I believe, a link to a support email, and folks can also email me directly. I believe my email is going to be in the chat portion, so that's always an option.
Awesome. Hey, Melinda, thank you so much for taking the time to jam with us. And for everybody out there watching and listening, we appreciate you. Hey, one of the biggest compliments you can give myself or Melinda is to share the show. That means a lot to us. We take the time to create this stuff, and it means a lot when you guys share the show. If you got a manager, an owner, or a colleague that needs to see some portion of today's conversation, it means a lot to us to share the show. Make sure that you guys are getting your copy of this report. Have the conversation and just fundamentally be prepared, and look out for the next episode of this podcast series, where we're going to dive even deeper into additional insights that Experian has. So thank you again for watching. Melinda, thank you so much for taking the time to jam with me today.
Great. Thank you.
Thanks for tuning in to the Experian Auto Insights podcast. For full access to the reports and more insights, visit Experian.com/automotive. Be sure to follow the show and stay tuned for more insights into Experian's quarterly automotive trends reports.